A new and explosive phenomenon in the investment world is called exchange traded funds. And you're thinking, well, that's not new. But really, in terms of how long there have been investments around, they are pretty new. Exchange traded funds, or ETFs, have been around since about the mid-90s. And if you watched my video on indexing versus active management funds, this will make a little bit more sense. ETFs, or exchange traded funds, are a basket of investments that are mostly just managed to an existing index. So for example, SPY, the SPDR ETF, mimics the S&P 500, the Standard & Poor's 500, which is the largest US 500 stocks by market capitalization. So it doesn't take a brain surgeon to manage that fund. The difference between an ETF and a regular mutual fund is this. Regular mutual funds trade once a day. In other words, if you put in a buy order or a sell order on a mutual fund that you own or that you want to own, the price of the mutual fund is determined at the end of the trading day, when, after the market closes, all the stocks within that fund are valued and the share price of the mutual fund is calculated. So you buy and sell mutual funds from the mutual fund company itself. They sell you shares, they redeem the shares for cash. Once a day is when you can trade them. ETFs, or exchange traded funds, trade all day long like a stock. So if you decide at 10 o'clock in the morning you want to sell your S&P 500 ETF, and there's a willing buyer, which there always is, you can sell that fund, or that ETF, by 10:01. It's done. You don't have to wait till the end of the day. Markets do go up and down during the day. ETFs are really designed for more active traders. Sometimes ETFs can be less expensive in their internal management fees than regular mutual funds, but that is not always the case. It's a myth that every ETF is cheaper than every mutual fund. That doesn't always happen. So you need to look at each investment individually and see what would be better. Also keep in mind that ETFs trade like stocks, therefore they have fees like stock trades. Mostly these days, stock trading fees at your discount brokerages are $8 or less. So it's not very expensive. But if you are actively trading your ETFs, buying and selling often, those fees do add up. So keep that in mind. Most mutual funds you can buy and sell without any kind of a trading fee or cost. So that's a very brief explanation of ETFs versus mutual funds. I want to put that out there because very often people come to me saying, I need to have ETFs because they read about it in a magazine or they heard about it on the radio. But these aren't people that actively trade their investments. So when I say, why do you think you need ETFs? They say, well, I don't even really know what an ETF is. That's why I made this video. I hope it was helpful. And if you're thinking about making changes to ETFs or not, definitely consult your financial advisor before you make any big changes.